Hello and welcome to another session of the My Solo 401k Financial, My Community Daily Webinar Series. Thank you so much for joining. If you have questions or topics you wish to discuss, please chat those over now so that we can be sure to get to them all. If you end up finding this to be helpful, if you could please like this video as it helps us to get the word out to others like you, as well as subscribe so you get notifications of when we go live. We go live every day with content to help you secure your retirement account. Okay, great. So again, welcome to our daily Solo 401k webinar and Q&A session with my Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic, upgrade your Fidelity Solo 401k by December 31st. Start claiming $1,500 in credits on your 2025 tax return. This is your chance to get answers. Please use the chat now to chat over questions on today's topic or anything else. Please chat them over now so that we can be sure to get to them all. Let's get started. So as always, the presentation is being provided for educational purposes only. It should not be construed as tax, legal, or investment advice, nor is a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So again, we want to talk about the process to upgrade an existing solo 401k at Fidelity and how that would allow you to start claiming $1,500 in tax credits on your 2025 tax return as long as you upgrade by December 31st. And what's great is that you can upgrade within the same day. So there's still plenty of time, in other words, to get this done in order to start taking advantage of the tax credits and the other advanced features of our solo 401k plan. So to put it in a little bit more context, Congress, via the Secure Act, enacted multiple tax credits to encourage small businesses to set up 401k plans to address the perceived retirement savings crisis. So one of those tax credits, the startup cost credit, is not available to a solopreneur that sets up a solo 401k, because in order to be eligible for the startup cost credit, you need to have non-highly compensated employees, where of course a solo 401k is a one participant plan. It's an owner only plan. So it may have a husband and wife that are both working in the business or two business owners, but you cannot have non-owner, non-spouse W-2 employees that are working on a full-time basis and be eligible to set up a solo 401k. So that's going to automatically stop you from being able to claim the startup cost credit. But there's another credit that was authorized under the Secure Act, which is the auto enrollment credit. So as long as your plan includes the auto enrollment feature and the other notices that are required in order to be eligible to claim the auto enrollment credit, the business can claim tax credits of $500 per year for 3 consecutive years for a total of $1,500. And the auto enrollment credit is not just limited to new solo 401k plans, but even existing plans that are upgraded to include that auto enrollment feature will be eligible to claim the credit. So we've always had many clients that have upgraded from basic vanilla plans at Fidelity, at Schwab, at Vanguard, in order to take advantage of our advanced features and service. But now there's another reason to do that, because upgrading your basic plan will not only allow you to take advantage of those advanced service and features, features like the mega backdoor Roth, the ability to do in-plan Roth conversions, the ability to take a solo 401k loan, as well as the ability to invest in alternative investments like real estate and crypto. But on top of that, the advanced service. So we provide the ongoing compliance support for the plan, and we don't charge an additional fee for that. So for example, if your plan needs a 5,500 EZ because the value of the plan exceeds $250,000, or if your plan needs a 1099-R because you're making a mega backdoor Roth contribution, or because let's say you converted money from a pre-tax status to a Roth status, or let's say you do want to take a 401k loan and you want us to prepare the loan documents. So we do provide that ongoing compliance support for no additional charge. So not only do you get access to those advanced features, the advanced service, but now you'll also be eligible to claim $1,500 in tax credits. And all you need to do is upgrade your plan. meaning the documents, by the end of the year. So we will prepare those restated plan documents, those upgraded plan documents within the same business day when you sign up. So that would be a reason. Now, if you sign up in 2026, that's still fine. You'll still get access to the advanced service and features. You'll get access to the tax credits, but you would be delayed in being able to claim those tax credits because you wouldn't be able to start claiming those tax credits until you file your 2026 tax return. Okay, so let's go through some of the questions that are being chatted up. Thank you for bringing the questions. First one is from Shelly. We've been coached to open a 401k solo account for our 2025 taxes and execute backdoor Roth transfers to Roth accounts. We understand that we have to open the solo 401k before the end of 2025. Do we also have to open the Roth accounts prior to the end of 2025? We understand we can make the contribution up until we file taxes in 2026 for 2025. That's a great question, Shelly. It's one of the most common use cases this time of year. And there's still plenty of time to meet the December 31st deadline if it's a new plan. Now, of course, eligibility requires that you're self-employed with no non-owner full-time W-2 employees working for any business owned by you or a spouse, if any. If you are, you're eligible to set up a solo 401k. Now, you could have two people, like a husband and wife, and that would still be eligible as long as there's no other non-owner, non-spouse, full-time W-2 employees. Now, in order to meet the deadline, you just need to sign up by the end of the year because you need to establish the plan by the end of the year. And a 401k plan is a legal entity, so it's a retirement trust. And so like any legal entity, it's the documents that create it. So all that's needed to establish the plan is the documents. And we create the documents within the same business day when someone signs up, the same day. So there's still plenty of time because you can just sign up today, you'll meet the deadline, and you can take your time to open up accounts and make contributions by your business tax return deadline, including any timely filed extension next year. So you can focus on the documents first, the accounts later. You don't need to open up that Roth account by the end of the year. You don't need to know exactly how much you're going to contribute by the end of the year. You don't need to open the accounts and make the contributions by the end of the year. You just need to focus on the paperwork first. Just sign up. Hopefully that helps. Wonderful question. Thank you for bringing it. Next question is from Daniel. I'm a new client, just started my solo 401k. I'm hoping to get some clarity on the process of contributions. I'm doing a cost segregation study this year, which will create negative taxable income. As such, I'm hoping to make the employee deferral portion Roth, the employer profit sharing Roth, and then finish off with the in-plan Roth conversion for the after-tax contribution. Aside from moving the money into the Schwab accounts, what paperwork is needed? That's a great question. Thank you so much for bringing it, Daniel. So as we just talked about in response to the first question, all that you would need to do to preserve the ability to open up accounts, make contributions by your business tax return deadline, including any timely filed extension in 2026, is establish the plan by the end of the year. We make it easy to establish the plan because establishing the plan just requires having the plan documents in place. And we create those plan documents as the IRS approved plan document provider within our system of record within the same day when you sign up. So you don't need to determine how much you're going to contribute. You don't need to open up the accounts. You don't need to make the contributions by the end of the year. Now, of course, it's noteworthy that your ability to contribute to the plan is based off of your self-employment income. So let's assume that your self-employed business is taxed as an S Corp. So in that case, it would be based off of the W-2 wages that you receive from the S Corp. Now, if your ultimate income is reduced, right, because of, say, depreciation that you're able to take from some other source, that's fine as long as you've got that positive earned self-employment income to justify those contributions. Now let's talk about what you want to do in terms of maximizing the Roth contributions. So the ability to make Roth contributions is one of the top reasons that customers sign up with us. And of course, our plan does allow for tax diversification. So you could make some pre-tax, some Roth, or you could do it all Roth. Now, for those that do want to make Roth contributions, they would typically skip making the employer contribution as a Roth contribution. Yes, of course, our plan allows for employer contributions to be made as Roth contributions, but it's more simple and streamlined from a solo 401k perspective to just make after tax contributions. And as a matter of fact, the most streamlined approach would be to just skip employee, skip employer, which you can certainly do, and just contribute 100% of your self-employment compensation dollar for dollar up to 70,000 as an after-tax contribution. So let's assume that your business is taxed as an S corp. As long as you receive at least $70,000 W-2 wages from your S corp, you can contribute 100% up to 70,000 as a voluntary after-tax contribution. Skip the employee, skip the employer, then transfer the 70,000 from the after-tax account over to a Roth Solo 401k. But again, you could open up the accounts at Schwab, which will prepare the paperwork to do that. You could do that next year. You could determine how much you're going to contribute next year, as long as you establish the plan, meaning sign up with us by the end of the year. Great question, Daniel. Thank you for bringing that scenario. Next question is from Phil. I was self-employed for most of 2024 and 2025, but went to W-2 employment in late 2025. I want to close down my self-employed business, but understand if it's not active, I may need to close the solo 401k I opened. What is the timing of when the solo 401k needs to be closed and rolled over to another tax-deferred vehicle in the eyes of the IRS? There's no strict timeline. You would just want to work on it methodically. I understand the solo 401k can be frozen for a period of time. Yes, that is true. So some folks, for example, they may be operating as sole proprietors. So of course their quote unquote business is not shutting down because they don't have a formal legal entity. And maybe they may still be open to having some type of self-employed business, because just because you have a W-2 day job doesn't mean you necessarily have to shut down your solo 401k. You could have a W-2 day job and have a side self-employed business with no employees and have the solo 401k for your side self-employed business. So if you're still in that in between area where you may still be pursuing that self-employment activity, you don't necessarily have to shut down the solo 401k. You can keep it in that frozen status. So it depends on the facts and circumstances, and there is some flexibility there, Phil. Thank you for bringing the good question. Next question is from Venkata. Can you help me with my question on Roth conversion? I was considering Roth conversion from pre-tax. Do I need to have this conversion started before December 31st? Or do I have time till April 15th, the tax deadline? So if you're converting from a pre-tax status to a Roth status, number one, you need to have a plan like the one offered by my solo 401k Financial that allows for those pre-tax to Roth conversions. Now, if you want it to be taxable for 2025, it needs to be transferred to the Roth by December 31st. Also, this conversion is from existing SEP IRA account from previous company. Do I need to create a new IRA account, traditional IRA, Roth IRA, to separate from the LLC trust accounts created as part of my solo 401k? So you could transfer the pre-tax dollars. If there's any Roth dollars in the SEP IRA, which now SEP IRAs theoretically could have Roth dollars, typically they don't because it's a new thing. But if you have Roth dollars in the SEP IRA, you can't transfer to the solo 401k. But if they're all pre-tax dollars or any pre-tax dollars in the SEP IRA, they can be transferred to the solo 401k. Now that would be pre-tax IRA to pre-tax solo 401k. And then once it's in the pre-tax solo 401k, you could then move it to the Roth solo 401k. You can move as much or as little as you want from a pre-tax solo 401k to a Roth solo 401k. That'll be taxable for the year of the transfer, like we discussed. It'll also be reportable for the year of the transfer. Now, we do handle that 1099-R that would need to be issued to report that pre-tax to Roth conversion as a taxable event. We handle that 1099-R for no additional charge. Customers or their advisors, we just need to go onto our website and submit the form to give us the information we need to prepare the 1099-R. Thank you so much for bringing the good question, Venkata. Next question is from Matt. Do you not need to make any contributions by the end of the year? I keep seeing that the employee portion has to be done by the end of the year for a solo 401k mega backdoor Roth. That's a great question, Matt. And that is not correct for a solo 401k. So it is correct if you have a full-time employer plan, the employees do need to make the contributions by the end of the year. Let's say you've got a corporate plan, right? You're working at Microsoft, you're working at Google, wherever the case may be. Those employees need to make their employee contributions by the end of the year. But the rules are different for self-employed individuals. Why? Well, the policy allows self-employed individuals more time because many self-employed individuals don't know how much they've made until after the end of the year. And of course, your ability to contribute to the plan is based off of your earned self-employment income. So per IRS publication 560, there's a chart on page 3. IRS publication 560 is the landmark guidance for self-employed retirement plans like solo 401ks. That chart makes clear that as long as the plan is established by the end of the year, you can make all types of contributions, including employee, employer, even voluntary after tax by your business tax return deadline, including any timely filed extension next year. Next question, another one from Matt. I'm an S Corp. If I did want to capture the tax deduction benefit, wouldn't I need to make the employee contributions and possibly one of the other types by the end of the year? No, you don't. Again, per IRS publication 560, even for an S Corp, as long as the plan is established by the end of the year, you can make employee, you can make employer by the business tax return deadline, including any timely filed extension. Now, if it's going to be a pre-tax employee, you want to let your W-2 provider know that you made that pre-tax employee contribution so they can reduce box 1 of the W-2. And then, of course, the pre-tax employer contributions, you would let the tax preparer know so that that deduction can be claimed on the 1120S, the S Corporation tax return. Great questions from Matt. Thank you for bringing them. Next question is from Amanda. I've opened my pre-tax, after-tax, and Roth solo 401k investment-only accounts with Fidelity, the non-prototype accounts. I've deposited to my after-tax account and want to do mega backdoor to my Fidelity Roth IRA. Based on your online guidelines, I need to fill the Fidelity form for the conversion. That's correct. And if the transfer amount is less than 100,000, I do not need the medallion signature guarantee. It's noteworthy that based on experience and client feedback, if you take the form, even if it's more than 100,000 to the Fidelity branch, then you typically don't need to have the medallion signature guarantee because they can verify your identity in person. However, Fidelity customer service told me that I have to obtain the medallion signature guarantee. Which one is right? So oftentimes the Fidelity customer service may not have correct information. I would say if you call, number one, you could try to call the team at Fidelity that supports these investment only accounts. Number two, you could go to the Fidelity branch, like I said, and then that would usually avoid the medallion signature guarantee. As far as the number of the team at Fidelity that supports those accounts, because again, we're not providing accounts, we're not providing investment advice. So we don't have access to the accounts, but there is a specific group over there at Fidelity. Their number is 1-800-544-5373. Ask for small business retirement. Based on experience and client feedback, they may be able to help you move it over the phone if it's going to just another account of Fidelity, like a Fidelity Roth IRA. And then, of course, it's noteworthy that once the money is moved from the voluntary after-tax account, either to a Roth Solo 401k or a Roth IRA, you want to go to our website, mysolo401k.net/forms, and submit the applicable form to give us the information that we need to prepare the 1099-R. Okay, let's go through a few more slides. If there are more questions or on these topics or anything else, don't hesitate to chat them over. We also want to take a moment to ask you to please like the video. If the information is helping you feel more confident about your future, please take 1 second to like and subscribe. Liking tells the platform that this content is valuable. So it tells LinkedIn, it tells YouTube, it tells X, Instagram, wherever you're watching us. It's going to tell the platform that the content is valuable. So other solopreneurs, other advisors can find it. And they may need this information to help secure their retirement account. So that'd be wonderful if you would like the video. Subscribing guarantees you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. So if you subscribe, you'll get notified of when we go live next. So December 31st deadline for those that don't have a solo 401k. That's the key deadline. And as we've been discussing, you can open the accounts later. You can fund the accounts later. You just need to establish the plan. And establishing the plan by the end of the year is going to give you the most options with the most time to make those contributions, the most contribution options. So you'll be able to make all types of contributions, employee, employer, even voluntary after tax, by your business tax return deadline, including any timely filed extension in 2026. And then also you'll be able to start claiming $1,500 in tax credit. So setting up our plan. Whether you're upgrading a Fidelity basic plan to our plan, or you're setting up a new plan, will enable the self-employed business to claim $1,500 in tax credits. That's $500 per year for 3 consecutive years. So back to Matt. So you're saying that if you're a W-2 employee of your S Corp, you only have to know the contribution amount in the proper tax documents. You only have to note the contribution amount in the proper tax documents, not actually have made any of the contributions themselves. Yes, that is correct. Exactly. The rules are different for self-employed individuals. So you can let your W-2 provider know of any employee contribution that you're going to make, park the money, then just deposit it. Just make sure you deposit it by that March 16th if you're an S Corp, or September 15th if you file a timely extension for the S Corp return, the 1120S. We talked about eligibility. It came up naturally in the flow of the conversation, but just to reiterate, a solo 401k, it's a one participant plan. It's an owner only plan. So it's specifically designed for self-employed people. So you do need to report earned self-employment activity on your taxes in order to be eligible. So that'd be, for example, income reported on Schedule C if your business is taxed as a sole proprietorship, or a single member LLC taxed as a sole proprietorship. Income that's reported on a W-2 if your business is taxed as an S Corp or a C Corp, or in the event of a business taxed as a partnership, income reported on line 14 of the K-1 that you receive from the partnership. The other prong, the other piece of the eligibility criteria is that it's an owner-only plan. So that means you cannot have any non-owner, non-spouse, full-time W-2 employees. You could have contractors, right? Those are not W-2 employees. You could even have part-time employees. You just cannot have full-time employees. Full-time means they're either working 1,000 hours a year with 1 year of service, or 500 hours a year for 2 consecutive years. So that means you can have a spouse that participates. You can have another owner of the company that participates, and it's still considered to be a solo 401k, as long as that other non-spouse owner is at least a 3% owner and reporting their own earned self-employment income. And as we talked about in the flow of the conversation, you could even have a solo 401k even if you have a W-2 day job, even if you participate in your W-2 employer sponsored plan, as long as you've got that separate earned self-employment income. All right, back to the questions. From Daniel, when I send money to the after-tax account, what is the process for taking care of the Roth conversion? Well, the process is to work with Schwab to move the money either to a Roth solo 401k or Roth IRA, and then let us know about that move so that we can capture the information. Because even though the voluntary after-tax contribution is not reportable, right? The after-tax contribution doesn't need to be reported on the W-2. For example, if your business is taxed as an S Corp, it doesn't need to be reported on the personal tax return or the business tax return, regardless of how your business is taxed. What needs to be reported is the second step, right? Because a mega backdoor Roth contribution is a two-step process. You first make an after-tax contribution and then move the funds out of the plan to either a Roth solo 401k or a Roth IRA. That second step from the after-tax to the Roth, that's what's reportable. It's reportable by the plan. Now, we handle that reporting for our customers for no additional charge. They just simply need to submit the form on our website to give us the information in a timely fashion. Another question from Amanda, just to follow up. If I do the mega backdoor to Roth IRA with Fidelity, and if the transfer amount is less than 100,000, I can mail the conversion form without medallion signature guarantee. Well, ultimately, that's up to Fidelity, right? Because they're providing the account. But if that's what the form says, and that's my recollection of what the form says, then yes, you could do that. I'm considering this possibility because we do not have a Fidelity Investment Center nearby. So I get it. Yes, you might want to call the investment only team, that number that I mentioned up above, and they might be able to help you over the phone. Next question from Matt. If I open an account today, what type of support do I get in setting everything up? Does someone handle the paperwork for me? Set up, get me the necessary tax docs. I already have a Vanguard Roth set up. So in that case, thank you so much for the opportunity, Matt. So yes, we're very hands-on. We prepare the documents within the same business day. We provide support by email, by phone. We provide support. All of our calls are scheduled so that we can get your questions to the right person. And of course, these daily webinars hosted by myself and the other owner of the company. So what we're not doing though is we're not providing the accounts, we're not providing investment advice, right? So we will never have access to your money, etc. Now the process, if you have an existing solo 401k like a Vanguard Roth, I'm assuming that's not a Roth IRA, but a Roth solo 401k, is a restatement. So you'll see on the application that we ask if you do have an existing self-employed plan, where do you have it? So you would say solo 401k at Vanguard. We also ask what is the original effective date, because we need to draft the documents as a restatement. So it relates back to the original effective date. Then you have the restatement date. So in that case, your existing plan is continuing, being cut out though, the plan documents, and replaced with our IRS approved plan documents that now allow you to do what you want to do. Then we provide the support, since we can only provide support for those that have our plan documents. So we definitely handle the paperwork to create the plan. Will then help you open up accounts at the bank or brokerage of choice. So you cannot have a Vanguard account for your solo 401k. Vanguard exited the solo 401k industry over a year ago, and they don't open up accounts for third-party plans for people who are bringing their own plan documents. But based on experience and client feedback, there's a lot of other good options like Fidelity, like Schwab, and we would be hands-on in helping you open up those accounts. Like for example, if you wanted to go with Schwab, we would pre-fill the paperwork that Schwab requires to open up the requisite number of accounts. And then as we've been discussing, we provide the ongoing compliance support for the solo 401k. So if the value of the plan exceeds $250,000, customers just need to let us know, then we'll add their plan to the queue to take them through the 5500 EZ process, where we file the 5500 EZ via the electronic filing system to make it easy for the customer. Now, we also do the 1099-R. That would be another tax document that would be required based on what's going on with the plan, right? So if you're making that mega backdoor Roth contribution, as we've been discussing, the second part of the mega backdoor Roth contribution is the transfer of the after-tax funds to the Roth account so that they can grow with that potential of tax-free growth. That transfer, though, from the after-tax account to the Roth account needs to be reported on a 1099-R. And again, customers just need to submit the form on our website, do it in a timely fashion so we can capture the information timely and prepare the 1099-R. And then we do that for no additional charge. So if you have a Roth IRA at Vanguard, then it would be a new solo 401k. It would not be a restatement. You set it up when you were a sole proprietor. So that's not going to still going to be considered a new solo 401k. Thanks for the clarification, Matt. So if you go to mysolo401k.net/forms, or just go to mysolo401k.net in the upper right, it'll take you right to the forms tab. So we talked about, again, with the December 31st deadline, you just need to sign up by the end of the year. We'll create the plan documents within the same business day, and that'll lock in your ability to open up accounts, make contributions anytime up until your business tax return deadline, including any timely filed extension in 2026. So this will keep all your solo 401k options open. It'll give you the most options, right? So you can make all types of contributions and the most time, because now you can do it by your business tax return deadline, including any timely filed extension. So that makes December 31st the critical deadline. Documents first, accounts later. Focus on the paperwork first, right? You don't need to open the accounts. You don't need to fund the accounts by the end of the year. Just create the paperwork, which we make it easy, right? It's just a 1, 2, 3 simple process. It's a 1-minute application. We just capture the information we need to create the plan documents for your business, 10 simple questions. Once you submit the application, payment is made. We prepare the documents within the same day. An email goes out with a link to the secure document portal where you can download the documents. Now, when you're ready to open up the accounts, which you can take your time to do that in 2026, you would then upload via that same initial email. There'll be a secure upload link where you can upload the completed and signed pages, and then submit the next steps questionnaire on our website to let us know where you want to open up the accounts. Because as we've discussed, we're the plan document provider. We provide a fully featured, robust plan. We provide the compliance support, but we don't open up the accounts. We don't hold your money. So we don't force you to go to a specific institution. Instead, we help you open up the accounts at the bank or brokerage of choice. So popular options are Fidelity, Schwab, bank accounts, etc. So via that questionnaire, you would let us know where you want to have the accounts at, and then we would prepare the paperwork to help you open up the accounts at the bank or brokerage of choice. So the reasons to sign up at the end of the year give you the most options in terms of contributions and the most time to make those contributions. Another reason, you can start claiming the $1,500 in tax credits when you file your 2025 tax return, because you would have established a new plan or upgraded an existing plan in 2025. So that means you could claim $500 when you file your 2025 tax return, and then again $500 for 2026 and 2027 for a total of $1,500. If you wait until next year, you would still be eligible to claim the credits, but you'd have to wait until 2026 to start claiming that $500 credit, and then again for 2 more years for a total of $1,500. All right, wonderful. That takes us to the end of the slides that we wanted to share. It looks like that also takes us to the end of the questions. We want to take a moment to invite you to our community. We have the largest community of solopreneurs, advisors, just around the solo 401k topics. That means we've got deep forums. We have active forums. When we have over 30,000 members, so there's active forums. We have a lot of resources, a lot of ways to learn, to share the knowledge. For example, a library of videos and webinars. It's totally free to join. You can join quickly and easily at mysolo401k.net/my community. So please don't hesitate to join. Again, it's free to join. It's not just limited to customers. Really, anyone that's interested in the topic, all are welcome. Will the Fidelity, we got a couple more questions. So back to Daniel. Would you be open to talking about how to use solo 401k funds to fund a real estate investment? Yeah, that's one of the most popular use cases. And our plan would certainly allow for investing in real estate. So the key, here's some of the key principles. Number one, it needs to be a passive real estate investment. So the real estate cannot be used for personal use, cannot be used for business use. The solo 401k owner cannot work on the property. Let's say they're a self-employed plumber. Even though they have the skill, right, they cannot do the plumbing on the property. It'd have to be a third party. So next key point is that the title, right, the real estate needs to be bought in the name of the plan. Any type of investment needs to be done in the name of the plan, the EIN number of the plan, to the extent there's any tax reporting. All the income and expenses needs to go in and out of the solo 401k. So if there's maintenance expenses, those would need to be paid with solo 401k funds. The income, right, say the rental stream, would have to flow back to that solo 401k account. So it would have to be purchased from an unrelated person, then sold if it's being fixed up, and then sold to another person. It would then have to be sold to an unrelated person, or if it's being rented out, it'd have to be rented to an unrelated person. Will the Fidelity accounts be able to be open by end of year? It's getting very close. Ultimately, Fidelity, all the financial institutions' processing times, like they always do, they go up at the end of the year. But at the same time, there's no rush to open up the accounts by the end of the year, because all you need to do is establish the plan by the end of the year, meaning the documents. Then you can take your time to open up the accounts and make the contributions. We can certainly help you open up the accounts, but there's no guarantee that Fidelity will be able to do that. Is it fixed $500 each year for the credit? Or do we have to have certain expenses for at least $500 in order to get the credit? No, it is fixed. It's not a function of the startup cost. So as we talked about at the outset, Congress created a couple of different credits to encourage small businesses to establish 401k plans. One is the startup cost credit, which is not available to someone that sets up a solo 401k because you need to have non-owner employees participating in the plan. The startup cost credit, as the name implies, is a function of your costs. Whereas the auto contribution credit, the auto enrollment credit, which is available to a solo 401k plan that includes the auto enrollment feature, is a flat $500. It's not limited. It's not based on, it's not dependent on the costs. So even if the costs are lower, the individual can still claim those credits. So for example, these $1,500 in tax credits will more than cover our fees for the first 7 years. We charge $650 as an initial cost, which includes the $525 establishment fee plus the first $125 annual fee. Then, starting 12 months later, we charge our $125 annual fee that covers the second year. So, if you added up all of our fees over the first 7 years, it wouldn't even amount to $1,500. I need to do the rollover because of the annual shares needing to hit a brokerage account and the incoming shares going over from. So it sounds like you are looking to establish a solo 401k and then do an in-kind transfer by the end of the year. That's definitely going to be difficult, but we'll certainly do our best to help you through the process. The reason it's difficult is because you're dealing with third-party financial institutions that are themselves having very high processing times at the end of the year. Moreover, you're trying to more advanced rollover because you want to do it as an in-kind transfer. So as long as the documentation is there, the accounts don't have to be open to be eligible for the 2025 tax benefits. That's exactly right. That's exactly right, Matt. So that's confirmed by IRS Publication 560, which is the landmark guidance for solo 401k plans. As a sole proprietor, next question from David. I use my personal account also for the business income. Once I open Schwab accounts for the solo 401k pre-tax, Roth, and voluntary after tax, can all the contributions to those accounts come from the personal account? Most definitely, because you can make all types of contributions, whether pre-tax, Roth, and or voluntary after tax from either the personal account or the business account. Either is acceptable from a solo 401k perspective. Can you invest in private hedge funds through the solo 401k, especially if I move traditional 401k assets to it from a previous employer? Definitely. Sachin, thank you so much for that great question. Our plan does allow for investing in private investments like a hedge fund. Now, you would need to be a passive investment. So the solo 401k owner cannot be on both sides of the table, right? They can't be working for the hedge fund or receive some type of referral fee. It'd have to be a passive investment, have to be done under the name and EIN number of the plan. But our plan certainly would allow you to transfer funds from a former employer plan and then invest those in alternative investments. So again, if this is helping you to secure your retirement, you're finding this helpful, we would really appreciate it if you like the video. Helps us to get the word out to other solopreneurs like you. Oh, I understand. So it sounds like those are shares that you receive personally. So you cannot transfer a personal asset to the solo 401k. You can only transfer the only type of personal asset you can transfer to the solo 401k is cash, which you transfer as a contribution. I just set up the solo 401k plan and opened the accounts. What else do I have to do in order to be able to claim the credit? You mentioned that to claim the credit, the Fidelity Solo 401k must be upgraded by December 31st. What does upgrade mean? So if you open the plan with us, in that initial establishment document email, there's a link to a deep dive webinar that we hosted with an IRS enrolled agent that goes through step by step how to claim the credits. Now, if you opened up a basic plan at Fidelity, then you would need to restate the plan documents to our plan. So you would need to submit an application where you would tell us that you already have a solo 401k. You would tell us the original effective date. You would make the payment. Then we would create the restated plan documents within the same business day, which means that you would have established the plan here in 2025, therefore enabling you to claim those credits when you file your 2025 tax return. So you need to have the documents that include the auto enrollment feature. So if you have those basic documents, you have a basic solo 401k from Fidelity, their documents don't support the tax credit, but you could restate the documents. Many people have a basic plan at Fidelity, then they want to bring their solo 401k to us. So that process is referred to as a restatement. You're not shutting down a basic plan at Fidelity and starting a new plan. You're restating the documents that you have at Fidelity to our documents, which now support the tax credit, along with the other advanced features. Then the plan would continue under our documents. So if you're with my solo 401k, if you go back to the initial email that was sent when you first signed up, there's a link in there to a deep dive webinar that we hosted with an IRS enrolled agent that goes through how to claim those credits. All right. Well, it looks like that takes us to the end of the questions for today. Thank you so much for the great participation. That's it for today's Solo 401k session. Thank you so much for investing your time with us. Your time is valuable. Your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building the Solo 401k community. We'll be back here tomorrow with more crucial content to help you secure your retirement.